Coming up on the show today, U.S. to negotiate comprehensive trade deal with Kenya. And Tunisia cuts benchmark rates by 100 basis points to 6.75%. Plus, South African Airways cancels 162 flights due to coronavirus. Well, thanks to have you on the program. Business Incorporated, I am BC Adebayo. Well, let's begin the show right away with numbers which were mostly negative at intraday here in Africa. Now, South Africa's GSE led losses as the index was down by 4.9%, while Nigeria's index shared 1.68% also at intraday. In Egypt, the EGX 30 lost 4.0%, while Kenya closed positive on Tuesday. And in the Middle East, most GCC markets reversed the negative trend and were all positive at intraday. Abu Dhabi's index gained the most by 2.29%, while Dubai's index added 1.03%. In Qatar, the market rose 1.65%, while Saudi's index was up 0.69% at intraday. Crossover now to Europe, where the market sank this morning despite Western governments promising to unleash billions of dollars to help businesses and citizens get through the coronavirus pandemic. But let's talk to Chelsea Julani to make sense of what's happening in Europe. She joins us live from the Frankfurt Stock Exchange. Good afternoon, Chelsea. So the U.S. is working on a potential stimulus package worth $1 trillion to support the economy. But why isn't this boosting European markets?
This is obviously a huge stimulus effort on the U.S.'s part. It would be bigger than the stimulus they unleashed during the financial crisis. But investors are sending a pretty clear signal today. They're saying this is not enough. There is a lot of concern about the economic impact this is going to have and how long the shutdown measures we're seeing, the quarantine measures across Europe, across the United States, and other parts of the world are going to last. Initially, a lot of economists had expected this to be a short-lived downturn, but now it's looking like this could last much longer. The head of the ECB, the European Central Bank, has said that this could last months, 3 months longer. So I think investors are having to recalculate what the potential impact of this could be, and so the signals are quite dour. The U.S. administration has signaled unemployment could rise to 20%. That hasn't happened since the 1930s. Here in Europe, the ECB has estimated growth could decline by 5%. And to combat those downturns, it's going to need more than $1 trillion stimulus. So investors just want to see these programs really ramped up.
One proposal from the U.S. is to give $1,000 directly to citizens. Is Europe considering similar measures?
We've seen a little bit of discussion about this. So far, a lot of the measures we've seen from governments have been, to provide a lot of liquidity to businesses so that they can stay in business, but also other measures for employees who are laid off. So here in Germany, for example, there would be compensation if your hours are reduced or if you get laid off. But economists also think that there needs to be a focus on giving cash directly to citizens. This is happening already in Italy. They're giving about 500 euros to citizens. But what economists say is that if we don't get money to people so that they can spend, then all of these other measures that are being put in place to keep businesses afloat are going to be outweighed by the fact that people won't spend their money with those businesses.
What about European telecoms companies, including Deutsche Telekom in Germany, saying that they are giving cell phone data to public health authorities? That's to help track the spread of the coronavirus. What do privacy advocates say about this?
These proposals are definitely causing a bit of an uproar. We already did see this happen in China and also in Israel, where authorities were basically using cell phone data to track individuals to see who they had come into contact with and how they were spreading the virus. The proposals we're seeing both here in Europe and also in the United States are they aren't as extreme. So Deutsche Telekom, a German telecom operator, says it's going to give anonymous data to the health authorities. So health authorities could look sort of at a state level, at a district level, but they wouldn't be able to look directly at individuals. But they say this could also be used to track to see if people are complying with shutdown orders. So I think for privacy advocates, this is a concerning precedent to set, because once you open this floodgate, will authorities sort of turn it off once it's over? So I think there's definitely a lot of concern about what this would mean for future surveillance efforts and digital privacy.
Many thanks, Chelsea. We'll see you again tomorrow. Let's cross over to our London studio now, where my colleague Juliana Olayinka is standing by to give us updates on what's going on in the UK. Good afternoon, Juliana. It's good to see you're still making it to the studio.
I'm still making it, Bissy. They haven't locked down the Tube and Britain just yet. Still waiting for that daily briefing at 4 p.m. though.
Okay, so let's begin with the numbers now. The FTSE had shed about 4% this morning. How are equities and currencies trading now?
Well, no surprises that the market is still in a frenzy over the coronavirus spread. At intraday, the all-share is down 4.84%. The FTSE 100 also down by 5.18%. The FTSE 250, the domestic market, really struggling at 4.31% down. In currencies, the pound is also receiving a battering at the moment, very low on the US dollar, below $1.20, which is quite historic. And so that's a 0.57 percentage points down. Also down on the euro by 0.55% and down on the Japanese yen by 0.95%. Some of the biggest fallers at the moment are, of course, travel and leisure groups. They've been suffering for the past couple of weeks. But engineering group Meggitt, they've been receiving the lion's share of the fall. Now, they look after Boeing. Boeing is their main customer. Their shares at the moment are down by a whopping 22%. So they're in bear market territory now. And also 31 Group PLC, they're the owners of the George Best Belfast City Airport Group. Their shares are down 14%. Also oil as well, not doing great at the moment. The spat between Saudi and Russia still goes on amidst all this coronavirus troubles. Royal Dutch Shell shares are down 6.4%, and BP, their shares are also down 5.9% at intraday.
All right, Juliana, I don't know how much shopping you've done or how much shopping you intend to do, but stores in the UK where you are telling customers to shop responsibly, while some like Sainsbury's are limiting people to only buying 3 of any single item. How are customers taking this news?
Well, this was announced just earlier this morning. I haven't been out, actually. I've been self-isolating in the office, but I presume nobody's listening. Look, for weeks upon weeks, people have been stockpiling. It's getting pretty drastic, which is why I presume the bosses of Sainsbury's, Asda, and all of the other major big 4 groceries in the UK have asked people to please not stockpile. But of course, that's not helping. One of the issues is, Bissy, is that we're seeing what's happened in Italy, now Spain, and now France. And of course, if Boris Johnson decides to give the country 48 hours to prepare for a lockdown, most people will panic. And so in the event of that, people are going to the stores. I suppose one of the reasons why people are telling customers not to do this is really for the elderly and the vulnerable. There are some quite sad images going around on social media of some elder people who are struggling to get just basics, just a packet of pasta, some medicine, some paracetamol, and that's really the issue. So people are asking, people to be kind, to not overshop. Really, it's usually those with the most money that are doing it. So yeah, they have put these procedures in place, asking people only to buy 2 or 3 of certain items. The problem is, Bissy, you buy 2 in one shop and you buy 2 in another.
See how far that will go. But of course, the supermarkets that have announced plans to help customers were leading the FTSE 100 rises this morning. Now, can you tell us more about this?
Well, there's not much to it, really. Yes, Sainsbury's this morning, their shares were up by about 7.7%. And what some economists are attributing this to is business rates. Now, Sainsbury's is just one example of a shopping site that pay over £500 million a year in business rates alone. And if those business rate holidays are extended to grocers, then of course that's a windfall for them. But I presume that the reason why a lot of these groceries are doing pretty well in the FTSE 100 is because, of course, they are seeing unprecedented queues. There are some queues, Bissy, believe it or not, in the United Kingdom that are over an hour long. That's to get into the shopping centre. Once you're in the shopping centre, the queues are worse than Christmas. So they're seeing windfalls. You know, it's unprecedented. A lot of these staff, so if anybody is concerned about getting a job, a lot of the grocers are employing at the moment because they're seeing record numbers and they're struggling to take it. So I think that's the reason why they're leading the FTSE, and it's likely to be like that for the days and weeks to come.
Okay, Juliana, let's all stay safe. We'll see you again tomorrow.
Thank you.
Shares in Asia Pacific mostly fell in another day of turbulent trade today as the rapidly spreading COVID-19 outbreak globally continued to weigh on investor sentiment. Australia's stocks led losses among the region's major markets, with the ASX 200 dropping 6.43% to close at 4,953.2 as majority of the sectors fell. South Korea's Kospi also saw significant losses as it dropped 4.86%, closing at 1,591.2, while Hong Kong's Hang Seng Index was also 3.49% lower as at the final hour of trading. Meanwhile, shares in mainland China shared earlier gains to close lower. The Shenzhen Composite declined 1.55%, while the Shanghai Composite fell 1.83% to about 2,728.76. In Japan, however, the Nikkei 225 also shared earlier gains, dropping 1.6% to 16,726.55, while the Topix index ended its trading day 0.19% higher. Overall, the MSCI Asia ex-Japan index dropped 3.25%. And in the U.S., stock futures fell in early morning trading today as markets remained highly volatile, with the government's response to the coronavirus fallout still unfolding. Earlier on, the Dow futures indicated more than 1,000-point loss at Wednesday's open, and the S&P 500 and Nasdaq 100 futures were also down. Futures contracts for the indices were in limit down territory, and that's a situation where trading is halted after futures have hit 5% loss and can go no lower. Recent overnight trading of figures contracts has seen extreme volatility, leaving many investors to believe computer trading has exaggerated moves in the market's collapse stemming from the coronavirus outbreak. And oil prices slid, of course, this morning too, and that was sapped by fears for fuel demand and the global economy amid travel and social lockdowns triggered by the COVID-19 epidemic in a number of countries around the world. Brent crude was down 0.38% at $28.34 a barrel, while U.S. crude was down 0.76% at $26.22 a barrel. A fall in U.S. inventories of crude, gasoline and of course, as reported by an industry group, provided some support to prices, but the demand outlook remains grim amid a price war among major producers. Staying with the markets, gold prices rose today as the U.S. Federal Reserve's measures to boost liquidity in the market eased some concerns over disruptions to the global economy and a potential cash crunch due to the COVID-19 outbreak. Spot gold rose 0.7% to $1,538.63 an ounce, and U.S. gold futures gained 0.8% to $1,538 an ounce. Elsewhere, palladium fell 0.9% to $1,629 an ounce, and platinum gained 0.8%, trading at $666.38 an ounce. Silver was up 1.7% after 8 straight sessions of falls. When we return in just a moment, we'll bring updates on midweek trading at the Nigerian Stock Exchange and more. Please stay with us.